QuickBooks Pro Desktop 2021. Make payment linked to a purchase order or PO. Let's get into it with Intuit. QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitar homepage. We currently have the Open Windows open. You can open the Open Windows by going to the View dropdown and selecting the Open Windows list. Last time we had entered a purchase order or a couple purchase orders. This time we're going to be making a payment on those purchase orders. So let's just take a look at what we did last time. If you click on the purchase order here, I'm going to go to the prior purchase order using the little back button. Go to the prior purchase order. We made one for Gibson. We made one for Epiphone. Remember that these aren't actually bills. We didn't make a payment. We didn't receive the inventory. There's nothing that was recorded on the financial statement related to them. It's just us making a request. This would only be done if you're in a situation where you can do that. You have more control as the purchaser to make a request without having to make a payment at that point in time, receive the inventory later, and then record the bill and make the payment. Otherwise, you won't have a purchase order. You'll just be making a payment at the point in time that you make the purchase, kind of like you would under normal circumstances for an individual purchase. Like if you purchase something online from, say, Amazon or something, you actually pay when you make the purchase. Not the case with the purchase order. No payment took place at this point. So I'm going to close this out. The next thing that we would assume to happen is that we're going to receive those guitars. We're purchasing guitars in our scenario in our warehouse, and we're going to compare the guitars that we get to the purchase order to make sure that we have the right number that we have. Now, normally we would enter a bill at that point. So we have the received bill or received with a bill. We would imagine it being received with a bill, enter it into the system, into the bill into the system, which would then record the inventory on the books, making a financial transaction, inventory being affected, the other side being to the accounts payable. Or we can skip this transaction, skip the bill entering, and go right to the payment. And that's what we'll do this time. Next month, we'll go to the enter the bills, but we're more on a cash basis. We want to go directly to the cash transactions for the first month, and then we'll do some more accrual type of stuff on the second month, which will include more stuff going to bills, accounts payable, and receivables. So let's go down. We're just going to write a check. Now, we could write a check down here. We can write a check here, or we can go into the banking up top and say write checks up top. We're going to make a form of payment. If you make an electronic payment, you could still basically link it with the check. Again, you just wouldn't use the check number. You'd use the same kind of form transaction in order to record the payment into the QuickBooks system. So, because it's going to be decreasing the checking account. This is the form that will be used typically when you decrease the checking account, even if a check isn't the actual thing that you use to decrease the checking account. So we got the checking account's going to be up top. We're going to assume that we are using a check, and therefore it's going to be the number being populated for us as we've seen in prior checks. If it's not a check, then you can delete the check number here, and you might want some other reference indicating an electronic payment or something like that. I'm going to say the date. Let's make it as of the 14th on the date. And then this is the key down here. We're going to go down to the payment, and we're going to be paying off, let's pay off Epiphone. I'm going to select the drop down, and then, or you could just start typing in Epiphone. It'll start to populate. There it is. That's the one. Now, when I say tab, when I enter tab, it says open purchase order exists for this vendor. Do you want to receive against one or more of these orders? So it's linking automatically to the purchase order. It's saying, hey, look, you made a request for inventory. Is this bill or payment that you're making linked to that inventory you made? Now, it may not be. We might be paying something else out, in which case we would say no. In our case, it is. It's linked up. So we're going to say yes. And there it is. There's the purchase order that we are now linking up. That's why we're paying, the vendor at this point. So I'm going to put a little check mark there, check mark, and then okay. And then it populates the whole thing for us based on the purchase order, which is nice. So there's the amount, the 20,000. Tabbing through this, we've got the address, memo. We could add the memo if we so choose. Down here at the bottom of the check, unlike what normally happens, we're on the items tab, meaning what does normally happen when you write a check? We're on the expenses tab. The expenses tab is deceiving because the expense tab doesn't always include expenses, but it could include any account. This would be more properly named as just an account tab, and then you would choose just an account that will be hit. The items tab will be used when we not only need to be hitting an account, meaning like this account being inventory, but also need to track something like the item, which in this case is inventory, which is pretty much always inventory in this instance. So we need to track not only the fact that we're going to be recording to inventory the costs of 20,000 increase in inventory, but also the fact that we are having 50 units of these guitars that are now on the books. So that's what this will do. So what's going to happen when we record this then? We're going to say there's going to be a decrease to the checking account. That's what it means to have a check. The checking account means that the checking account will be going down. The other side is going to be increasing inventory, even though we don't see any inventory account down here indicated. And that's because the item, when we set up the item, we indicated that when we purchase the item, it's going to go into the inventory account. So this item is going to be driving the increase to the inventory account that we will see. We will also see the units of inventory increasing as we track the units of inventory in QuickBooks using the average flow assumption method. So let's check that out. Let's say save. Let's go save and close and take a look at these one at a time. I'm going to go to the reports drop down, to the company and financial, and on down to the balance sheet. So within the balance sheet, I'm going to change the dates in the range up top so I can have the range. And so it's going to be 01/01/21 to 12/31/21, whole year, even though we're only in the month of January, that's fine. And then I want to take a look at the checking account. We now made the payment, so there's the payment, 20,000. Double clicking on that 20,000, there's the actual check. Closing that back out, closing this back out. Other side's going to inventory. So here's the inventory. Double clicking the inventory. There we've got the 20,000 for in the inventory, and there's the actual check. And notice the check type. It's a check type as well, indicating that it's a check that resulted in that. And then if I go to the reports drop down again, and we want to go to inventory, and let's take a look at the inventory valuation. Let's take a look at the summary, inventory valuation summary. And I'm gonna change the date to 12/31/21. And there we have it. So now we have that 51, see, in the ELP at the $400. And if I double click on that, you'll see the detail of the transaction changing the first date from 01/01/21. So there's our transaction there. Closing this back out. I'm going to say no. You can see the total and the asset value at the 22,896. We're going to sell them for the 28,622, but this amount here is the amount that we should then see on our balance sheet, 22,896. Going back on over here, we've got the 22,896, so that should be the general rule. So we're going to do it again. So let's go back to the home page, and we're going to add another check. So we'll do it again for that second purchase order, which was from Gibson. So I'll say check, and we're gonna keep the check number. Again, if it wasn't a check, you delete the check number or put some other type of indication of electronic payment. I'll keep it as of the 14th again. The vendor is going to be Gibson this time, so I can drop down and find vendor, or simply type in Gibson and then tab. And then once again, it says, hey, do you want to link this to the purchase order? I'm paraphrasing there. It says, hey, do you want to link it to the purchase order? And we're going to say, yes, I would like to link it to the purchase order. And they're going to say, there's the purchase order. I want to check it off. That's the one. I'm going to say, okay. It's going to populate based on that purchase order. So the 5,980, notice it's not on the expenses tab. It's on the items tab because we're talking about inventory. That means that we have, this is the amount of is the inventory item. The inventory item, we're going to have 10 of those units at a cost of $598. That cost is driven by the item that we set up. So the total amount is that 5,980, the 10 times the 598. And then notice also that we had the customer that's pulling over. I didn't mention this on the last one, but it's the same thing. The customer pulled over because we entered the customer into the purchase order. The vendor didn't need to know about the customer, but we wanted to know about the customer so that once we have then, it'll run through. Now we're making the check, and we have the check here, and we're going to make it basically billable, meaning this will run through, this item will run through, and we can use this now to create an invoice. So this will help us out. The billable will help us out basically to create an invoice with this information. So obviously now that we have the guitars, we bought them specifically for this customer. That's why we put it on the purchase order. And now once we have the guitars, we can turn around and then go to the customer and bill the customer. So what's this going to do to the financial statements? Well, once again, it's a check. Therefore, it's going to be decreasing the checking account. The other side is going to be going to inventory, which is driven by the item. That's how it knows to go to inventory. And you will also have the units be adjusted due to the fact that we're tracking the units on an average, weighted average method. So we'll say save and close there. And then I'm going to go to the balance sheet. And if we double click on the checking account, we see that decrease for the Gibson guitars. Double clicking on that item, we see the amount of the decrease in the check once again, closing that back out, closing this back out. Then on the other side, we see the inventory. So inventory, double clicking the inventory, there's the inventory item there. And then if I close this back out, notice if I go back, now let's go to the inventory valuation summary in the open window. And that's going to give us the 10 units here for the Gibson. So there's the 10 units have been added there. If we look at the total, the 28,876, that should line up to what we have on the balance sheet, 28,876. And so there we have it. And then if I go to the home page, just note next time, now we've received the inventory and we bought them specifically for a client that asked us for it, or a customer. So now we can go down and use that information to populate the invoice and go through the customer side of things, saying, hey, we've got this inventory for you that you requested, and therefore, come pick it up and we'll bill you on the customer side of things. So let's just review where we stand on the balance sheet. Here's where we are on the balance sheet. There's no effect on the income statement, because although we made a payment and we wrote a check, and on a cash basis, we would have an expense related to it, but we're doing an accrual type of thing. And instead of having an expense, we put it on the books as an asset here. So we have the asset increasing. Let's take a look at the trial balance. So you can just take a look at the trial balance, a little easier to compare your numbers to. That's going to be in the accounting and taxes trial balance. I'll make that as of 01/01/21 to 12/31/21. And so here's another check for your numbers if you're following along with the practice problem.